Hello there. For anyone that doesn't know me, I'm Mark Kozlowski. I look at the sheep market here in AHDB MI, and so I'm here to present to you the sheep market outlook for the year. So what we're going to do is we're going to talk about the current situation and what's happened in 2015. Then we're going to talk about a little bit about the rest of the world, and then we'll move on to our outlooks and some of the wild cards that can affect the UK sheep industry. So current situation in the UK, I'm sure everyone in the room knows that prices in 2015 were fairly low. I remember I was here in the audience last year and Stuart Ashworth was presenting, and he was saying at this time of year he was surprised and he couldn't understand why, with the high levels of production we had and with the currency situation, why prices were holding up so well. Well, after March, they didn't, and they didn't see, so they actually had a better than normal start, but then we actually didn't see our normal seasonal peak as there were lots of lambs coming through. We had a large carryover from the 2014 lamb crop, and so we didn't see a seasonal peak in prices. This led prices to fall behind their 5-year average, and to fall behind the level seen the previous year. This remained the case throughout the year, apart from September, where we saw Eid led to a little upturn in demand. Incidentally, Eid moves forward by about 10 days each year, so this peak should be shifted a little way to the left next year. In 2016, we've seen a good start to the year in terms of prices, which have been increasing in the past few weeks. They actually moved above their 5-year average for the first time in a while last week, and they're moving more generally closer to last year's 2014 levels. If you look at prices in October last year, they were the lowest level since 2009. But if you actually look at that on a longer time scale, actually it's not at that low level. Prior to 2009, prices were quite considerably lower than we're seeing them now. So actually, last year's prices on a historical basis aren't that bad. Production in 2015 was up, and this was one of the large reasons for the low level of prices. We saw an increase in production, and if we look at the seasonal pattern for production, we saw a large carryover of lambs from 2014 at the start of the year. Then we also had an earlier Easter, which led production to decline in April. We had our Eid demand in September, but then at the back end of the year, we saw production fall off quite significantly. And this has really led to some of the developments we've seen recently with prices increasing. We've also seen fewer lambs actually falling within the SQQ specifications that we have. So actually, we're seeing more lambs coming through at heavier weights. So, which is not what we suggest at AHDB, and what we're actually suggesting is more lambs should be going to market when they're ready. And actually, this was lower last year than it has been in previous years. We also, which took us by a bit by surprise last year, we saw a very low level of ewe slaughterings. They were lower for the first 8 months of the year, and with the prices being what they were last year, would have expected more people to be culling ewes. So actually, we saw a fall in the past few months. So from September, we have seen a few increases in ewe slaughterings, and potentially the December data may be revised upwards based on some of the throughputs at GB markets, but it's still not the levels we're expecting. So this has taken us a little bit by surprise why people are holding on to their ewes. When we look at trade, last year, obviously the strength of the pound really hurt our trade with the rest of the world. Obviously, our largest market for UK lamb is going into France, and we became less competitive last year because of the strength of the pound. In recent weeks, we've actually seen that fall back, as Debbie said. It's started to correct itself, and also some of the Brexit stuff should also lead it to probably not be as strong this year as it was last year, and that's obviously going to help us with our export situation. So if you look at UK exports in the first 11 months of 2015, they fell quite considerably, although we do have some doubts over this data. We're not 100% certain about it, and certainly if you speak to our export team, they think it's incorrect. But what we do agree on is that export conditions last year were very tough, and we do think that we saw a decline in exports last year. Looking at France, our biggest market, there were protests from French farmers in the middle of the year, which led to French supermarkets increasing their domestic sourcing. We also saw Operation Stack, which led to a lot of lorries and transport getting disrupted into the continent. And then also we had this pound-euro exchange rate, which also hurt our exports last year. You'll also notice this brown bar at the top. This is Hong Kong. Shipments to Hong Kong declined quite sharply last year. There were problems at ports in Hong Kong, obviously problems with the grey trade. This meant that exporters weren't getting paid and were reluctant to send product out there. So we saw quite significant declines to Hong Kong. So all in all, our exports declined, but maybe not by as much as this is showing. When it comes to imports, we saw a lot of people suggesting last year that we were being flooded by product that was coming in. Actually, in the first 11 months of the year, we saw imports to the UK decline. On the flip side of that, we saw more product actually come in from New Zealand. And there was some reasons behind this. Obviously, the pound was very strong against the New Zealand dollar, making New Zealand product very competitive on our market. There were lower volumes of New Zealand product going into China, and there was higher levels of production in New Zealand last year. So all in all, this led to increased imports from New Zealand. But overall, our imports were actually down last year in total. One of the issues is we haven't seen that much more product coming in from New Zealand, but what has been coming in has been coming in at a lower price. So it has been meaning that we have had to lower prices in the UK to compete with this level. So if we take all that into account, last year we saw high levels of production, we saw our imports decline slightly, we saw our exports decline even further, and this all meant that our supplies for consumption were up quite sharply last year. So that was obviously one of the reasons for the price decline last year. When we look at retail sales, obviously we had more product on the market, but if we look at retail sales, we had very good Easter trade. Easter trade usually falls across March and April because it obviously moves. If you add up March and April sales, last year was better than the previous 2 years, so we actually had a very good Easter trade. However, sales fell quite sharply in the summer, and we saw quite weak trade and below the level seen in the previous year. We saw quite a lot of other meats and other proteins were very price competitive last year, so we didn't see a very good summer. However, as the price of lamb fell in supermarkets from September onwards, we've seen quite an uptick in demand at retail level since September, and that's carried on until December, and we're expecting that to continue into January, as lower prices at retail are driving increased sales. So when we look at the UK situation, we have seen low prices in the past year, but they have been increasing in recent weeks and months. Production was above the levels of 2014, but we have seen it decline recently. And we've seen less sheep meat coming into the UK, but we have seen these very tough export conditions. When we look at the rest of the world, if we look at the New Zealand lamb crop from the 2015-16 season, it's actually fallen to its lowest level in almost 60 years. This is 1.7 lambs fewer than the year before, and they had a drought last year, which meant that they reduced the size of their breeding flock and actually had a very low lambing percentage as well. So it's a lot of factors have fed into this, but they've got a low level of production in New Zealand. However, if we look at the actual number of lambs that are being slaughtered in New Zealand on a week-by-week basis, since the beginning of the year, we've seen quite a significant increase compared to the previous 2 years in terms of lambs being slaughtered there. This is, obviously they're moving their schedule earlier, and this is expected to continue to fill the Easter trade, and the high levels of slaughter are expected to continue to fill that Easter trade. But then obviously if they've got 1.7 million fewer lambs and they're slaughtering them earlier, this is going to have to fall away sharply. But I have got to put in the caveat that when exactly this will decline is a little bit disputed, and I've heard that some people think that it might be a little later than possibly Easter. We've also got lower production expected in Australia this year. There's also been high levels of sheep slaughter in recent years in Australia. This is expected to decline next year due to a smaller breeding flock again, and they've got fewer ewes to cull, so that lower mutton production in Australia. And in the EU, one positive sign for the UK is that EU production has fallen in 2015, and it's following a normal, quite a long-term trend of production in the EU declining. And obviously, when production in our major market, France, declines, then there's a potential opportunity for UK to ship products to France. On the flip side of this, we have seen demand within France declining in recent years. So this is there's pros and cons with the European market at the moment. China is, as Debbie said, been widely suggested as a great market opportunity for people, and obviously it is one of the areas we're looking into shipping to. Last year, though, demand did fall. We saw a number of reasons for this. There were high stock levels of imported product on cold store. They had very high levels of production domestically, and also there were cheap prices for pork last year. So all in all, that led to lower volumes of sheep meat exported to China, which meant more has come onto the global market. What we're hearing at the moment is that it'll be at least second half, maybe even the fourth quarter of 2016 before this starts to correct itself. So lower production in New Zealand, lower production in Australia, but then we've got lower production in the EU, and therefore a large market for us to tap into. And China's imports have been falling last year and are expected to continue. That moves us on to our UK outlook. So when we produce our outlooks, it's largely based on the size of the breeding flock that we see. So when we saw Defra's official figures for the size of the breeding flock in 2014, we saw a large up increase. Obviously, with the fairly negative sentiment within the industry we saw last year, we're expecting the breeding flock to fall in 2015 and then again in 2016 due to people removing themselves from the market. One of the things we normally see is when there's a change in the size of the breeding flock, we usually see a similar change or similar direction of change in the size of the number of lambs on farm the following June. So last year, when we saw an increase in the number of breeding ewes, would have expected to have seen a large increase in the number of lambs the following June. However, the official figures suggest that there's been a sharp decline in the number of lambs born. So this took us a little bit by surprise. We were initially thinking there was going to be a much larger lamb crop last year, but actually the numbers which we're hearing from Defra suggest that actually it's fallen. This means that we have had to revise down to our previous forecasts. So this is what we previously forecast, and this is what we're now forecasting. So we actually revised our forecast down in light of this information. However, as I said earlier, we have seen low levels of ewe slaughterings last year, which means that obviously if the breeding flock is going to fall, there will have been fewer lamb retentions, so they'll be feeding through at some point. So despite us revising our forecasts for lamb slaughter down, it's actually still, in 2016, we're expecting it to be marginally up. So it's not up by as much as we previously thought, but we're still expecting it to increase. Before in 2017, we expect it to start declining. Adult sheep slaughterings in the past couple of years have been falling quite dramatically. So obviously, we've got quite a large breeding flock at the moment. We're expecting this to increase next year because obviously we've got a large flock and we need to, and it's getting older, and that's going to continue in 2017. Carcass weights were very high in 2015. We're expecting that to continue at the start of 2016, but then falling back towards the end of the year as they fall back to a more normal level, and then further falls are expected to be seen in 2017. So overall, this suggests that production in 2016 is going to increase compared to 2015, but a lot of this will be due to an increase in the number of ewes culled, but there's also a small increase in the number of lambs before falling back in 2017. When we're looking at imports, Obviously, the situation in New Zealand is going to play a large effect on what's happening to the UK imports. We're expecting, because of their earlier slaughter schedule, we're expecting them to ship more in Q1 of 2016 before this falls back towards the end of the year. So actually, we're expecting fewer supplies to come into the UK from New Zealand from Q2 onwards, and then increasing marginally in 2017. When it comes to exports, obviously, we've seen quite a lot of problems last year. We're expecting a lot of these to correct themselves in the next year, and we're expecting exports in the next year to actually rise compared to the previous year, especially with the pound-euro exchange rate moving in a better direction for UK exporters. So when we look at overall supplies for UK consumption, we've got higher levels of production, imports declining due to the New Zealand situation. Exports we're expecting to increase. So overall supplies for consumption we're expecting to be higher next year, but actually not as much of an increase as the previous year. Some wildcards that can obviously affect production. I think this has been reeled out for all of these presentations. Obviously, weather's going to play a large effect as we move into the lambing season, and on how many lambs are born and how much production we've actually got. The exchange rate's going to also play an effect. If we look at the chart of the 2014 price and the 2015 price, if we were to convert the UK price in 2015 into euros and then convert back again based on the peak of the exchange rate, this is what the UK price would have actually been last year if the exchange rate had stayed what it was in June 2014. So actually our prices would have been a lot better if the exchange rate had been in our favour. And also, as the exchange rate has been moving lower recently, this could help prices in the UK. Diseases, we've obviously seen a few outbreaks of blue tongue throughout Europe in some of the major producers. So we've seen it in France and Romania last year. We did see restrictions put on movements of sheep and cattle in France last year, and this is obviously a worry for UK producers, but also potentially it's leading to a decline in production in France, so potentially an opportunity for us. So overall, we're expecting higher production in 2016, but that's due to lower retentions last year, leading to an increase in the number of lambs in the carryover. We're also expecting increased ewe culling. So overall, production will increase next year, but then fall back next year. We're expecting production difficulty into New Zealand to lead to lower supplies in lower imports of New Zealand product in the UK, and we're expecting more favourable export conditions. But obviously, these wild cards are going to affect the market next year. Obviously, if we've got more product on the market, then it's going to put pressure on the prices. But we have seen that retail demand has been picking up recently, and retail demand does generally respond quite well to prices. So if prices are going to be are at a lower level, generally more people are buying lamb. So there is some positives there. And also, with the exchange rate falling, we're expecting our exports situation to be more positive next year. So that could put some positive pressure on the market. However, as another comment is that obviously, if we make sure that lambs are marketed when they're at target spec, it will help to producers to make sure that they get maximum returns. Thank you very much.